Back. Global recession is all set to deepen further. Yet, in order to tackle this problem, which is going to be growing menace in the backdrop of the coronavirus pandemic, central banks all over the world have tried to use many monetary measures to infuse liquidity to reduce interest rates. Now, what is happening as a result is a lot of asset prices are going up. The stock prices have shot up, and there is an increasing likelihood of asset bubbles being created. Investors' recent appetite for risky assets is not delegated only to the stocks, but is now getting into bonds as well. The spread of the speculative grade US corporate bonds over the US treasuries has reduced to 5.74 over 7.57 in the month of May. That shows that there is now a greater risk appetite, a greater appetite for riskier bonds than it was a month back. The University of Michigan consumer sentiment has also improved to 78.9 in the month of June as compared to 72.3 in the month of May. And this was not only the consumer sentiment of the US economy at the point of time today, but also a year down the road that has also improved. So I believe that the rise in the asset prices is causing to the substantial improvement in consumer sentiment, yet people are loath to spend money, and the US savings rate, for example, has gone up to 33% as compared to 8.2% just a 1 month earlier, that means Americans have increased their savings by $6.15 trillion in just 2 months. That shows that they are spending less and saving more, which is indicative of the gravity that the American consumer is seeing of this recession, which is going to turn out to be a very bad global recession. And you can see it pretty much across the world. In India, there were no auto sales in the month of April. And we found that even in other countries, the situation has not been any great. In the United Kingdom, in the month of April, there were 197 autos manufactured as compared to 70,000 in the month of April 2019. So year-on-year comparison, 197 as compared to 70,000 a year before. United States, the sales of previously owned homes has fallen 18% April over the month of March. So month-to-month comparison leads to a further drop over there. United States GDP itself is expected to shrink by 4 to 10% this year. OECD is, however, expecting a rise of 7% next year to minus 1% degrowth next year, 2021. United Kingdom economy has taken a really bad beating, and there is a $1.15 trillion loss in output expected in the United Kingdom, which is equivalent, by the way, to the annual output of Indonesia. Indonesia, 270 million is the annual output, and that itself is the loss in the United Kingdom, just month-to-month comparison. The exports from the manufacturing behemoth Germany has fallen dramatically, almost by 1/3. Bosnia and Croatia, no steel manufacturing in April. Okay, and you find that the place of fashion, France, clothing sales are down 67.4%. That's substantial for France. We may be back to 80s, as far as the comparison is concerned. The world is going to see decades of lost output if you were to put in comparison. Having said that, United Kingdom is headed for the worst peacetime year since the Great Frost of 1709. Okay, where Europe had frozen for 3 months, due to devastating food crops and mass starvation. So things are really turning very ugly in whichever parameter that you would like to look at it. And this is not only restricted to manufacturing, autos, steel, so on and so forth, but across the world. South Africa, mining and production, it's one of the powerhouses as far as platinum and gold is concerned. Output dropped by half in just last 2 months. Substantial fall. On April 13 in Russia, florists gathered together in St. Petersburg to destroy tulips, chrysanthemums and lilies, just to show their wrath as to how much they are facing the wrath because of the lockdown conditions, and how much output they are able to sell is so little, so they destroyed so much of it. In Kenya, there is a famous Maridadi flower farm, and there were 500,000 roses were destroyed every day during early April. Okay. Now you can see the signs of global recession are there all over. However, what happens is when there is such a steep fall as has happened in the month of April, what happens is that there is a rebound that takes place which is rather quick and which is fast. Now that has already happened. However, as the news starts spreading of the second wave of coronavirus, especially in those countries which are lifting the lockdown, right? They are experiencing new cases. As that starts coming into perspective, you will start feeling that the feel-good factor about the world economy will start disappearing away, and you will start seeing that there is a fresh wave of fall in stock valuations that would take place. I believe that we are on the cusp of another sell-off in global stock markets. Global recession is expected to deepen further and impact stock price valuations. The first signs of this after the March 23 rise that had taken place, the first signs will be there in this week, which is beginning June 15th. You will see a fresh wave of selling coming in this week. Not exactly on Monday, but it's just there this week itself. And please take that into perspective in planning your future investments. If you have not yet subscribed to my channel, please do so. Please share this video to whoever you believe and whatever WhatsApp groups you believe would find it useful. And feel free to be a part of the Art of Investing course. We have some very interesting ideas. We tell you much beforehand, good investment opportunities much before others do. So we'll find this and we'll give this to you. And you can benefit tremendously from our investment perspectives. We work very hard. And feel free to WhatsApp me on 982-086-1044. Happy investing. Take care. Bye-bye.